Ladies and gentlemen, the CPF returns are finally going to be higher, and that's a very big news. How come Mr. Lu is saying this? Well, there is a big announcement that's just been made by Parliament, and I think everybody should take note of that. Let's watch on and see what's the implications to all of us. And I can say this, it's good news, it's good news, it's good news. So in today's presentation, I'm going to share everybody that Manpower Minister Tan See Leng has just announced that there's going to be a new scheme that's going to be launched, waiting for 10 years, and now finally is coming up. And this would likely to result in a higher returns for our CPF. So why must the CPF scheme evolve to this is because Singaporeans have longer life expectancy, and we are now one of the highest living human in Singapore. And the average life expectancy for men is about 81 years old. For women, it's about 85 years old. So, it's going to be much higher than the rest of the world and set to grow even higher. And inflation is, eating up, makaning up all our purchasing power, and is set to do that for all of us. And I think the returns of CPF historically has been pretty humble. And this is probably not going to help many Singaporeans a lot. So this is where I think the long-awaited LRIS scheme is coming out. So the CPF foundational philosophy that we have been counting on for 50, 60 years is really about preventing poverty in old age. It's just making sure that Singaporeans in our retirement will have adequate savings for our living. And it's always been about being preservation of wealth, be humble in our growth, but just make sure that we don't take any risks and so on. So preservation has always trumped over growth in the CPF philosophy. Now, the new scheme is called the CPF Lifetime Retirement Investment Scheme. By the way, it's quite a mouthful. It's called LRIS, Lifetime Retirement Investment Scheme. I hope they will change this to something sexier. So the LRIS is set up or going to be set up with the government intent of providing higher returns for Singaporeans in exchange for some investment risk. And I'll give you more details of it. The scheme was first introduced in the making in 2016. So it's been 10 years already. So I understand that this is a fairly complicated scheme. So probably that's why it took 10 years. And it's accepted in principle that this is needed, and it's taken 10 years to evolve. And now is expected to be implemented by 2026, which is great. So this is, in short, a simple, low-cost investment alternative. I don't know whether it's going to replace a CPF IS scheme or just an add-on, but it's potentially for members who wants growth potential, but yet you don't have much investment expertise. By the way, there is a lot of Singaporeans in this bucket, and I came up with a video and actually advise everybody, if you are not confident in investment, don't touch investment. You can do very well with your CPF Life, okay, and your ordinary account, and you can have a very comfortable investment. And I think this is where the government now realized that maybe we should, push a little bit higher and allow people to take some managed risk, okay? And for people who lack investment expertise or knowledge, this is where the government comes in and help everybody. So this is now institutional organized investment. That's very good. Now, why did the LRIS took almost a decade to develop? Well, to be frank, I don't know. Okay. But, Minister Tan See Leng actually said that there is a lot of complexity involved, and market changed dramatically over the last 10 years or so. There's a lot of volatility, and you probably want to introduce this scheme at a more stable kind of environment. And volatility cycles do hurt people's investment. What we don't want is to launch it and we hit a market crash and it fails totally. So many of the investments are in some sense irreversible, so they don't want to do it at a time of failure or high risk. So this is my guess, okay? And rightfully pointed out by Minister Tan See Leng, the scheme must strike a balance between risk and return and safeguard retirement adequacy. I think this is paramount. So the priority is adequacy before returns. Now, S&P 500 don't give a damn about your adequacy, they care about returns. For on the other hand, okay, the CPF need to make sure that everybody, don't dump their whole kitchen sink into this thing and it crash and burn. So this is where they follow a few philosophy, and I thought, I think it's important to highlight some of this is that we know that time in the market matters, but time in the market differs from people to people. Mr. Lu has 20 years to his retirement, for example, but some of our retirees have only maybe 5 years to retirement or already in retirement. So they can't take much existential risk, okay, or investment risk. And if there is a forced liquidation, meaning that I'm 70 years old, I need the money now, and suddenly the market goes down by 50%. Wow, jalat, right? So the LRIS must reduce the sequence of return scheme, meaning that late stage investors cannot take those risks. So the current CPF IS scheme, which is the CPF investment scheme, is basically saying that with your ordinary account, you can use it to invest in a range of products. I don't know, 50, 100 products and things like that. Too many. How to choose, okay? And a lot of people with no investment experience just anyhow whack, okay? All on the advice of not well-informed or unethical financial advisors. I'm not saying all are, I'm just saying some. They make wrong decisions, okay? So that's quite a big dammer on their CPF investment. So the LRIS aims to reduce complexity by limiting the choices of the options available. Instead of 100 products, maybe 3, 2, 1, I don't know, okay? And they standardize all this into investment grades allocation and make it simple for the average Singaporeans to decide. Okay, it's basically invest and forget. That's the best way to make money in investment. Invest and forget. So I think it's very important to note that CPF as a fund has economies of scale, huge economies of scale, a few hundred billions of dollars. So therefore, with this kind of scale, they can help to command economies of scale when they negotiate with fund managers also. So the fees are likely to be kept very low and the expense ratio will be kept low. And this scale could potentially help to be able to bargain to get better choice of products. So I think this is a very good move by the government. I'm just hoping that it could be faster, okay? So when the returns are at market rate and the fees are low, wow, these kind of returns are going to be very high. Now, this is something that they highlight in the philosophy of the LRIS, which is called the glide path philosophy. And the glide path philosophy basically says this: the younger members likely to have allow a higher exposure to stocks, okay? Maybe 60 to 80% for stocks for growth, and maybe 20% or so in bonds, and allow time to let it compound, whereby the older members are probably will have a higher ratio in bonds and less in stocks. I've taught everybody in my crash buying philosophy that rebalancing is about taking your age as a yardstick in bonds. So if someone is 70 years old, roughly 70% in bonds, that's a good yardstick. So I think the LRIS scheme developed by CPF will probably take on something in the same philosophy. So with this, they will preserve capital and manage the risk according to the investment. Taking a chapter from a few countries, our neighbor, the Malaysian retirement system called EPF works somewhat similar. They contribute something similar to our CPF, and they got a powerful returns that are developed by the EPF. The EPF return so far is in a range of 5 to 6%. That's very, very high. It's not just in their special account equivalent, but it's across all their accounts. Like they call it account 1, account 2, or something like that. We have our ordinary account, special account. And that's insanely good, right? So that kind of returns are so wonderful, and that's something that we look forward to. And if they could mirror something like that, I'll be very happy. The Hong Kong system follows a different philosophy. They have a MPF system, okay? And it's called the Mandatory Provident Fund, where workers have to contribute, but they then choose what funds to invest in purely by the workers themselves. And if they don't decide, then there is a default investment scheme called the DIS. And the DIS scheme is basically low-cost index tracking, and it's low cost and it's age-based. If you are old, you will give you very low return but more stability. If you are high, they'll give you high return but less stability. And this is quite an interesting system. The returns of the DIS scheme gives you, for those younger people, give you a return of 6.9% on average over the last maybe 10 years or so. And that's really very good. And I wish that Singapore, the new LRIS scheme will try to move towards that direction. So comparing all the systems, well, our CPF today is government guaranteed, very safe, very stable, but limited growth. In the EPF system, they allow for volatility, but a very strong returns across all their accounts. In the Hong Kong MPF system, let's just take a look at the DIS system, which is basically the default investment scheme. It just gives people one set of products to invest in, and people take it, good returns. And the Singapore LRIS scheme is yet to be seen. I think it probably mix and match all the system. My guess it will be probably closer to the Hong Kong DIS scheme of some form. And I don't mind, right? If it can, as long as it's anything better than 2.5%, gravitating towards the 5 to 6%, I will be very, very happy. So why does the LRIS scheme fit Singaporeans? Well, it's because we have a particular culture in Singapore. Singaporeans don't like to take risks. Singaporeans like to have dividends, very stable. Okay, they love the growth, but they will not trade. Okay, they will not take growth if there is some risk to their capital. So given that this is the kind of culture that Singapore investors have and CPF member have, then maybe the scheme will gear towards something more stable and protects the member from catastrophic losses, okay, but provide some better growth than what the CPF is having right now. So I think the LRIS scheme is likely to be very transformational. It is not about beating the market. So if you want to beat the market, go gamble yourself in the Nvidia, the Tesla, the Bitcoin of the world. That is not what the LRIS scheme is about. It's about helping people who are not familiar with investment. They will take care for you. So it removes the existential risk of stock picking and let compounding take its course at a reasonable growth rate at a low cost. And that's great, right? I think that's great.